is going to change your world about interest rate and what the banks are doing to do what? Build their wealth, and why you as the American consumer and folks out there all over the world is going to be watching this later, how the banks are taking advantage of you and using your dollar, your dollar. Remember this, your dollar is very, very valuable, and you need to understand the power of your dollar. So let's go into it. I'm going to go ahead and get started to help you understand one of the things I'm talking about. So here's why I'm doing this post. So here, the reason. I just finished having a meeting. I'm in my office, you can see. Folks come to me all the time with different questions about money so I help them. I educate them and help them change their mindset. So here's what happens. I had a person that came to me and they wanted to understand, okay, I've been offered, I'm about to buy something, and I was offered a zero interest. Okay, now for those of you that get those zero interest offers, so they wanted to know my take on it. And the first question I asked the person, I said, listen, how many months are they giving you this zero interest to pay? And he said, well, 24 months. I got paid in 24 months, but I'm paying zero interest. So here's the tricks the banks play. So let's go in. It's a lot easier. Let me share my screen, because it's a lot easier for you to understand this than me trying to explain it to you without you seeing my screen. So I'm going to use my screen, for example, and share it so you could see it. All right. So again, make sure you share and like. This is going to change your life and your family's life and people that you care about. Make sure they see this, because so many people have been misled. The banks, the media, and the government, all three of them work hand in hand to do what? To keep the American people financially broke and mentally broke. Let me repeat that again. The banks, the media, and the government work hand in hand to keep the American people mentally broke, financially broke, so they could control your money. So how does that work? Well, the bank talks to the media by giving them millions of dollars to keep messaging you, telling you the same lie over and over and over. Why? Because the bank want to get your money from you fast. So in this case here, let's look at this example. This person, he has a zero interest loan, $20,000. So let's use that, 2 years. So $20,000 zero interest loan, he's going to pay the bank basically zero interest. All right, so he's going to give the bank zero interest in 2 years. That was the question he called and asked me. He said, what should I do? So the next question I asked him, I said, are they offering you anything else other than the zero interest on the, do you have other options? He said, yes, I have another option where I could pay 2% interest rate for 5 years. So here's the deal. Folks, very, very important you understand the value of your money. So I want to prove this to you, that what I told him to do is this simple stuff. I said, listen, take the 2% interest for 5 years. Now, I know you're going to be like, why should he do that? Why should he take the 2%? It's zero interest. You see, we as human beings, we've been programmed to focus on interest rate, right? Zero interest, 24 months, sounds like a great deal. Awesome, sounds good. You pay zero interest. But listen, what you're missing out is the interest you're paying inside is $833. See, the bank, yes, they offered you zero interest, but they're only giving you 2 years to pay them. And guess what they're doing? You might see zero interest in the fine print, but where you're paying the interest, it's coming out of your wealth. This $833, that's your hard-earned dollars that you're about to give to this bank in 2 years. So let me show you, and I'll prove my point, because it's so important for me to prove this point to you. So let's bring up a calculator, because I want you to see what I'm about to do right now. We want to bring a calculator up. Let's bring it up. All right. So we have the payment of $833. That's what they gave them, $833 a month. All right. So we're going to write that in here. I'm going to subtract because we're going to pull the other amount, the 2%. So I said, why don't you take the 2% for 5 years? Since the bank is going to offer that to you. So we're going to take 5 years. So is that, so the payment dropped to $351 a month. So let's go back to our amount minus 351 monthly payment. So we're saving $482 a month. So here's what I do. I said to the client, I said, listen, the 482, you could put that away in an account that you control. So we're going to take 482 and we're going to put right here. Okay. I'm using the same interest rate, 2%. In 5 years, he's going to have $30,389. The interest he paid to the bank, when we look at the interest he paid to the bank, $1,033. That's all he gave to the bank, $1,033. But he paid it to them in a span of 5 years. In the same 5 years, he took the difference in his money and invested it. And folks, look at what I did. I still use the same 2% interest rate. I didn't change it. I didn't do 4, 5, 6. I use the same 2 because you know why I'm using the same 2? Because I want to prove something to you and show you that compounding interest is a lot stronger than simple or amortized interest. So in this case, 2% compounding, and we have accounts that I could do a little bit more that's guaranteed. And but we're not talking about accounts. I just want to teach you something so you can understand the value of your money. You got to always be looking at the end result, folks. 2%, $1,469. That's his profit. That's his money in his account that's going to keep growing. At the end of 5 years, he has control of his 1,469. Control is the key. $30,000. What if we were able to switch this up a little bit and put a 4% rate of return on there? Look at that. $3,000 in interest earned. See the difference? 2%, still not a bad idea. See that? So folks, what I'm doing here is teaching you a different ways to start looking at stuff. So many of you have fallen victim of this banking institution. You've listened to a financial advisor that is working for the banks. They don't understand. They even know they're working for the bank. A lot of them think they're working for themselves, but they're working for the bank and the government with the type of information that they're feeding you. So what I'm doing is helping you on break that myth, that lie that the banks have been telling you for years. See, the thing about it is when you've been told the same lie over and over and over for 1,000 times over, you start believing it to be true, right? So this simple example proves a point to you that you need to be in control of your money. You have to be in control, because when you give up your money just because you were thinking, I'm only paying 0 interest. See, when you think you're only paying 0 interest in 2 years, I'm going to only pay 0 interest. And I'm not going to pay the bank anything. I'm just going to pay them 0 interest. You end up missing out. You end up losing at the end, because the bank is in the business of making money. I didn't pay any interest. I only paid 0. And I did it in 24 months. But you lost interest on the $482 that you could have been making on your money. See that? You lost interest on the $482. So what I say, finance that stuff for the length of time. If they can give it to you, see, another thing you could ask them is, give me the 0 interest for 5 years. See, if I could get it for 5 years, I'll do that also. But guess what? Don't settle for 1 year or 2 years and pay up all this big money. That's a lot of money out of your income. See, you make income and then you transfer into the bank fast. the bank is going to get your money because they understand the value of a dollar. So the bank understand the value of a dollar, so they want to take it away from you as fast as possible, so they could do what? Loan it to somebody else. See, by you paying this off in 2 years, that's $482 difference that they are making if you have financed it. Because that's what I told the gentleman. I said, listen, financing for what was the option they gave you? He said they gave him a 5-year option with 2%. I said, take that option. And he said, oh, really? And I proved this to him. I said, your payment will be lower, $351. You can afford to pay that, right? He said, yeah, I could do that all day. We'll take the difference. We're not going to spend the difference. Still treat the $800 as if you're paying that debt anyway. So we want to take the 482 because you've already programmed your mind to do what? To pay that money on a monthly basis. So because you've programmed your mind to do it, then what we're going to do is redirect the money into a different account that's going to yield you and give you power, give you control, give you protection. And you know the beauty, the best part of this is no one can touch the money except you. So folks, I just wanted to do that before, this is wanted to share that real quick, kind of help you understand some things. And let me see. Hey Michael, what's happening, man? How are you? Does any of you have any question for me? This is your time to ask. Go ahead and ask. Type it in the chat box. Let me know. If you have question, type it real quick so I could respond to it. If you do not, then you know what? I'm going to call it a night. But listen, stop letting the banks brainwash you. So important that you are in control of your money. All right. So with that, folks, you'll have a great week. Monday to Friday. I know you're going to go to work. You're going to grind. You're going to do what you do. But you need to be in control of your money. Your money is like a car. Let me repeat that. Your money is like a car. You got to park it somewhere. What garage are you parking your money? Are you parking it in an account that you're earning 0.1% that has a lot of risk attached to that account? Or are you parking it in a place that is safe and is protected? So think about that. Mull over that for a minute. Understand it. Your money needs to be safe. It needs to be protected. You cannot worry about, you should never have to lose your money. The tax lien, creditors cannot touch your money. You need to make sure your money is protected from creditors, from divorce court. Divorce court, folks, listen. When you have money in a 401k, it's 50-50. When you have money in a savings account, it's 50-50. When you have money in your house, when you're parking your house garage, is 50-50. There are accounts, and like I always say, that you could park your money in some states, they can't touch it. And then we could show you how to really protect that money. So nobody, no one is protected from creditors and predators. They can't touch your money. So listen, I'm out. This is all I got for you. So I just wanted to do this real quick and help you today. I hope somebody's blessed. Listen, share, like the video, spread it out, send it out to people that you love, friends of yours that might need this advice. Somebody is getting ready to make that decision to do what? Either finance stuff and pay cash or whatever they're trying to do. But in this case, listen, tell them to stop and watch this video before they make that mistake. Next time, I'm going to talk about real estate, mortgages, 30 years versus 15 years, extra payment on mortgage. We want to address that next time. With that, folks, peace. Thank you.